Hi, Bruce here from Voodoo Trading. Welcome back to our YouTube series where we walk you through how we trade our systematic rules-based trading strategy. Once again, we're not suggesting that you should purchase the securities that we highlight here, but rather our goal is to show you the steps and the thought process that we go through to remove emotions from the trading process and systematically implement our trading rules. It is our belief that each trader should develop their own trading strategy that fits their personality and with rules they understand and can systematically execute. Okay, let's get started and review the new exit signal for the US dollar ETF that our trading strategy generated over the last couple of days. And then towards the end of the video, we will review the performance of our other active trades. In our previous YouTube video from May 10th, we described that the US dollars was one of the over 50 markets that we follow and review daily, and that it was on our watch list because it exhibited characteristics of a trending market with a number of higher highs and higher lows as shown on this attached chart. In the previous video, we described in detail how our trading rules got us into the US dollar trade. Let's go through a quick overview of that trade. Trade set up when the US dollar ETF broke through the previous high of $13.04. The setup was shown by the red dashed line on this chart. Our buy stop order was hit when the upward trend continued and our $13.10 buy and stop order was filled. This is shown by the green line in the chart. As soon as the trade was initiated, we placed a stop loss order at $12.86 so we could control the amount of risk on the trade. Stop loss level shown by the pink line on this chart. Our risk control determined that we could afford to buy 1,000 shares of the ETF. So let's see how this trade played out. Surprise, surprise, the day after we ended the trade, it reversed, and within a week, our stop loss order was hit and we were automatically kicked out of the trade. No big deal. We know from our back testing of our trading strategy that we're going to be wrong more times than we are right. If we take all the signals our trading strategy provides us, we'll be wrong approximately 60% of the time and right only 40% of the time. When we enter trade, we have no idea if it'll be a huge winner or a small loser. Our trading rules only allow 3 outcomes: a small loser, a small winner, or a big winner, and we're constantly hunting for that big winner. Every trade is a successful trade if we were disciplined and followed our trading rules. Even though we didn't make money on this trade, we now have useful data that we can use to fine-tune our trading strategy. We log every trade in our trading journal so we never lose this valuable data. We save the chart with a red background so we can quickly identify it as a losing trade. We record when we bought it and the price we paid, when we sold it and how much we lost on the trade. On this trade we lost $250 or 0.25% of our theoretical $100,000 trading account. We then review the trade to see if there's any lessons learned that can make us a better trader moving forward. This trade was successful because we followed our trading rules, and we know based on our backtesting that if we continue to execute on all trading signals, we will be profitable over the long term. You can see by the highlighted candlestick that on this trade the price reversed as soon as our stop was hit. If this happens over the long term, we may want to review our stop loss trading rules to see if it can be fine-tuned. But you only want to consider changing your rules when you see consistent patterns over dozens of trades. Okay, let's take a quick look at our active trades. After getting out of the US dollar trade, we now have 6 active trades. We're currently about 70% invested, primarily in energy, material, and agricultural ETFs. Our trading strategy currently has a 37% success rate this year, which is close to our 40% target. As of the end of April, our trading strategy is a 15% year-to-date return. Please let us know if you have any questions or comments on today's video. Thanks for watching, and we'll talk soon. Cheers.